Steady state for the market. So let's get talking about what's taking place in the commodity space. Manisha Gupta joins in to tell us what she's tracking and some perspective as well. Manisha, is it crude?
Oh, it absolutely is. Yes, you can't keep away from that with the kind of gains that we continue to see on that space. It is about healthy demand estimates, especially with the kind of exports numbers that have been registered for Asia, whether it's India, South Korea or China. We've seen numbers gain up month on month, year-on-year basis as well. And then, of course, it is about the OPEC and the allies pledging further cuts as we get into the month of March and April as well. While, of course, the only spoiler is the IEA report, which says that the US crude output will continue to grow for the next 5 years as well, estimating a number of 13.7 million barrels per day, which is 12.1 right now. It also goes on to say that they're expecting the crude exports as well to double, and so will be the case with crude products, etc. And that is something that continues to keep the prices in check. But let's get in to understand the numbers in greater detail. And joining us for that is Peter McGuire now. Peter, hi, thank you so much for your time. What is your sense? Because while, of course, we continue to talk about supplies, whether it's from US or the OPEC and Russia, etc. But what is your sense on the demand numbers, which seem like Asia continues to be on the top foot here?
I don't think that storyline's gone away. Really, when you're looking at population base, you're looking at consumption numbers, you're looking at just automobiles, motorbikes, ferries, cars, trucks. Everything that works across Asia needs power. And there's no real substitute. You know, whilst we talk about the electric vehicles and what's on the horizon, it's going to be near impossible to actually charge them in power. So, you know, you've got great ideas, but I think it's going to be a long time coming. So, yes, the demand picture is very, very strong across all of, the South Koreas, looking at what's happening in China, India. It's just a non-stop, move to the upside as far as demand picture, and that will only continue as each and every week, month and year roll on for quite a number of decades yet.
Okay. So, while, of course, demand is a big positive, what's your sense on supplies? Because if it wasn't for the US crude output and the expectation that we will continue to see record highs in the next 5 years as well, we actually perhaps could be looking at a balance or even a deficit, but for US output. How do you look at the numbers, and what's your sense as we move forward in sense of supplies from other oil producers?
I tell you what, I think if US were producing 4 million barrels a day and not 12, then crude prices would be probably $20 a barrel or more higher. And it's been, I think, quite extraordinary, really, over the last matter of a decade, what the US has, done as far as its own production numbers. And now the largest producer in the world. And what's going to be their ultimate headline number? Are they going to shoot for 15 million barrels a day, 16 million barrels a day? I would assume that that's probably quite conceivable because they've got, monstrous reserves. And where you're looking as far as politically, there's no doubt that, most governments, because from an inflationary side, want to see cheaper oil prices if you're a consumer, but if you're a producer, naturally you want higher numbers. So the storyline doesn't change, the moving parts don't change, all the actors involved in these, global scenarios. And it's, I think, one thing for sure, and this is to every trader's delight globally, that the volatility is certainly here to stay. It hasn't gone away, and it will only continue to be ramped up because US dollar strength, what happens as far as China and US trade talks, North Korea and US, what's happening there, denuclearisation, and of course the unknown, ever-ending or ever-going saga with Brexit.
Peter, since you mentioned about the US and China trade talks, and there is uncertainty that has stretched over quite some time now, you talked about volatility as well. So would you say that we've learned to live with the US and China trade uncertainty now? What is your sense? What kind of an impact are you looking at, not just crude, but for metals as well from there?
Well, I tell you what, you've got to keep an eye always on the copper market, what happens there as far as from a demand picture and just, oversold and then becomes overbought. It's a wonderful barometer, and it just gives you a clear indication from a global theme what the demand picture is out there from not only usage, but again, it rolls across all of the other base metals. It's hard to determine which one's got more upside because, again, you can be upside for a day or a week, or you can be, it can plateau out in a fortnight. and then all of a sudden ramp up over a trading session of 5 or 6 sessions and just be extraordinary, nearly to the point of parabolic, or limit up each day. So, again, I certainly keep an eye on them, but traders really relish these markets, and the reasoning is quite simple, because they can be long US dollar today and short US dollar tonight, or in a matter of hours, and that's the same thing as far as any of these commodities that have large moves. Oil bid up overnight was, again, US equities bid up overnight. It's all the ingredients of a very exciting market, and certainly one that offers much opportunity for any trader globally.
Oh, well, fair point that. Peter, but just before we let you go, what is your sense on the crude oil prices now? Because, the consensus really seems to be building that we might see $70 as an average Brent price for 2019.
I think it's got to be. It's very close to it now. Though, if you would have asked me that on Christmas Day, I think there would have been many analysts saying that you'd be lucky to hit $55 a barrel. Yet it's been bid up so extraordinarily, strong since the start of the new year. In that 10-week period, in the first 6 weeks were just extraordinary. So I think there's further upside. The reasoning is quite simple. What's happening as far as these cuts? What goes on in Baku on the 18th of March? I think you're going to see further cuts. The uncertainty and the sheer, it's quite devastating, that the whole picture as far as Venezuela, from a humanitarian side, economic side, it's totally dire, the whole nation. So what impact that has, and remember, for all the viewers, Venezuela holds the largest reserves in the world. So, what happens when you roll that across to Russia and so on? All of these countries want higher prices, so I feel as though that they will edge up higher from here. As I said, if you have a weather outage and hurricane season and all of those sort of impacts that come into the market towards mid-year, prices could certainly go a fair bit higher than here.
Oh, well, absolutely. $3 away from that 70 mark. And yes, the 18th March meeting that you're headed to in the Middle East, of course, is of most importance when it comes to the OPEC oil producers there. We will keep an eye on that, of course.